Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look at the gold market again. So right now on the daily chart, as you can see, the gold market starts to show some behavior that was suggested by the harmonic swing. So we said that the 1275 area, 1277 is some kind of the top where something could happen, because on the daily chart we do not have any other hints, any other tools that could help us to estimating on some reversal points, some patterns or something. That's actually nothing except this harmonic shape of this consolidation or something. It's really pretty harmonic, and as these tops are almost equal, so these swings almost equal to this one, these swings also are mostly equal to each other, and in fact mirror symmetry. So we will draw this line in the middle. You will see that this side is similar to that one. That's why when you see the very good harmonic swings that's pleasure to an eye, usually it means that this should be reliable. And currently, indeed, the market is starting to reverse down. Actually, this was reaction on the ADP report. This was rather positive, although the current numbers were a bit worse than expected. But this was very great revision, more than the 40,000 jobs created in the private sector over the last month, June. At the same time, reaction was a bit limited. Yes, it was positive on the hourly chart. It was rather strong, but on the daily chart, as you can see, reaction is not really very strong. Why? Because actually, guys, the driving factor for the gold is not the jobs created, but inflation. And ADP report was positive, and investors right now are encouraging to see the non-farm payrolls data, but they probably will be watching not for numbers per se of the employment, but on the inflation, the wage growing. And this will be, in fact, the major part of the report right now, because currently the job sector in the United States mostly stands at full capacity, so it mostly totally utilized during last year, because the non-farm payrolls data was showing really significant numbers. It was a surplus of the approximately 150,000 each month. That's why the utilization degree of the job market on the job place in the United States stands almost at the total saturation. It's very close to it. That's why right now all eyes stand on inflation. And this explains why this reaction was a bit not very strong. That's one explanation. Second explanation, guys, is sanctions that were signed by the Judge Donald Trump recently. Not all investors understand right now, and in fact markets just haven't yet understand that. In fact, this sanction stands not against Russia, but this sanction stands against the European Union economy. This is using the political leverage, political tools for resolving on economical problems. So it's some kind of economical war, because the United States tried to make an impact in the European Union economy. Especially this could be clearly seen from the sanctions against the Nord Stream 2, and just would like to replace the Russian gas, natural gas, by the liquid gas from the United States. And since it cost stands approximately 3 times greater than the natural gas, so you could imagine what will happen with the European Union economy if it will start to buy the gas and the oil, maybe sometimes sometimes more expensive than they are buying right now. So this is really the economical war. And this really, since this is some kind of the geopolitical tensions, and they are just yet to start, just we right now start to hear just first bell on the discussion on some protests from the European Union representatives against the sanctions. This story is just yet to start, and they will start to get pace more and more in the nearest future. That will be geopolitical factor. That also could bring support to the gold. So on the 4-hour time frame chart, we see that the channel has been broken down, but as you can see, this breakout is most dynamic, and market stands very close to the weekly pivot point. On the hourly chart, as consolidation has been broken, we have two extensions down here. First one stands at 100%, so already has been hit, 1262. Next one is 161 extension of this A, B, C top stands at 1255. So today, guys, probably will be some release on the market, some relief, some come down because major event has happened. Market probably will turn to some retracement. That brings some shape of the hand shoulders, guys, here. So we have discussed this already, something on that sort. This could be today's could start to form some kind of right shoulder, and tomorrow, on the non-farm payrolls release, it could be some more downward action. Next support is at 1251, 1255 area. That will be the next destination for non-farm payrolls reaction probably tomorrow. That's what we'll see on the market, because guys, here in the short-term perspective, the drop was really fast. That's why probably it could get some continuation. Market actually almost has reached this target. Just for a few cents hasn't been achieved, a few bucks. And chance really exists that if non-farm payrolls data will be really positive, especially inflation will be significant, wage growth inside of this data, this probably could lead to the further dropping down.